There are several things that can make you a bad trader even if you are good. Today in this video we will cover on how to make take profit the easy way, because I have noticed that some of you guys take profit way too early. And lastly in this video we will also cover on how to analyze the higher time frame and use the lower time frame to make an entry. This is what I call double confirmation. Before we begin, I want to point out that this video might not be beginner friendly to some of you guys, but I will try all my best to make this video to be simple. Everything in trading has its own strategy. For example, you have to know when to get into the market with precise rules and rough planning. But the problem comes when you want to get out of the market. From this example on the screen we can see that we have a bearish correction or zigzag correction. For this kind of a pattern I always use 4 take profit. 1. Being to target the lower low here because the market is bearish. So is likely to take out the previous lower low. 2. I will use a Fibonacci extension to target the 1% and the 1.2% of the Fibonacci extension. But today in this video we will focus mainly on targeting previous lows and previous highs in the market. If you are new to the channel and you are still surprised why the entry is there, then I suggest you to watch the previous video in the description below. Because this video will be very challenging to some of you guys. So from this example we can see the same exact pattern with an entry before the breakout. Now we can see that the market only took this low and then moved higher. So by using our trading strategy will help you to enter before the breakout. Because if you are still entering on a breakout of trendline here and your stop loss being here, then I guess your trading account will be on red for a while. And you will also take some time to recover the losses. So this example demonstrate that don't always put your high hope on a trade and go full margin just because you want to get rich quick and drive a Lambo. To understand on how to make take profit, firstly you have to understand the market structure, which is this one here. If the market is bullish and you enter here on the higher low, your high hopes of take profit should be on the previous higher high here. Even if you do analyses on the higher time frame, while your entry being on the lower time frame, then you should also target the higher time frame higher high. Like from this example, let's say you entered here on the 4 hours using the lower time frame 15 minutes as your entry point. That means now your take profit will be the lower low on the 4 hours time frame. And don't be scared to hold a trade. Just remember how many trades you have missed while taking profit way too early. Yes, I am talking to you, bro. I know you did that more than 20 times, bro. The first example will show you that there is no 100% win rate trading strategy. From this first example we can clearly see that we have a bullish trend. We have a demand zone, a confirmation candle, and also this is sniper entry. And lastly we will put a horizontal line on the sniper entry. Then in the lower time frame we will use this yellow line as our entry area to enter with low risk. So let's move on to the lower time frame. By the way, this is the 30 minutes time frame. So that means our lower time frame can be the 5 minutes and 1 minute time frame. By doing so we will have double confirmation and reduce the risk while targeting the 30 minutes high as our take profit level. Guys, this is how you get 1 to 50 trade setups. But just stick around, you will understand it clearly. In the lower time frame the first thing that you need to do is to wait for the market to firstly touch the sniper level area that we have made in the higher time frame. Then the next step is to find setups that aligns with all the rules in the trading plan. So let's try and find those trading signals. And remember guys, if the market doesn't invalidate the previous low of the 30 minutes demand zone, the market will still be bullish. But once the market breaks the low here, it will make our whole setup to be invalidated. Meaning we should just avoid trading this market. After the market has touched the zone here, we can see that we have an entry here that goes with our trading plan. But the market decided to move higher and comes back to stop us out. Someone might be wondering why would this trade be in loss if it moved higher for a bit. Someone could have put the trade to break even, and yes, that trader could have saved 1 pip. But guys, from the beginning of the video I have mentioned that in trading everything have its own strategy, so even my strategy has a break-even strategy rules. Because I don't want to be stopped out early. We lost 1 pip on the first trade. Because we use proper risk management, that means our trading account is not blown yet. So we will try another trade, which we can see that the market missed the sniper entry here. But there is another setup followed by this one. As long as the market confirmed in the higher time frame we will keep looking for a bullish setup in the lower time frame. We reduced the risk in the higher time frame. Now we are going to be doing the same thing in the lower time frame, but this time we enter the market. Here we can clearly see a full trading setup with a sniper entry. This will also demonstrate two areas of sniper entry point. And as we can see, the market triggered the trade and moved higher to hit the take profit on the 30 minutes high. If you use proper risk management, you won't even have to worry about losing one trade if you can catch this kind of trade setups. And I know some of you guys will go full margin on some setups. But then I guess you're ready to cry over one trade when your trading account is close to margin call. Guys, I have back-tested my trading strategy with over 30,000 setups and still counting every day. So from this example you will see that the market sometimes in the higher time frame might not even touch your sniper entry level. But what I have noticed in that when it's close to the line, the market is likely to make a setup in the lower time frame. So from here we can see that we are on the 4 hours time frame, meaning our lower time frame will be the 15 minutes or maybe even the 5 minutes time frame. Now that we are on the 15 minutes time frame, we will try to find a setup when the market touches this level. But we can clearly see that the market never touched that level. So what are we going to do in this kind of situations? I guess this example will just set you apart from the different traders, so let's find the setup that aligns with our trading rules to enter the market, and for take profit, we will target the previous high on the 4 hours time frame here. And remember, the market already confirmed in the higher time frame. My advice to you guys is to never move to the lower time frames without any higher time frame confirmation, because the market can do some dirty stuffs to you. Okay, let's continue. From this lower time frame 15 minutes we will be waiting for the market to touch the zone here. But we can see that the market never did that and it's very close to that point. So in this situation guys, what you need to do is to follow all the entry rules if you don't want to miss out. But use a small risk this time. Because we know that the market is likely to touch the level. So for in case if the market go against us, we will lose a small portion of our trading account. And yes, if it was me I would enter the trade as long as it gives me a low risk. And to point out something, I will also watch this demand zone below the higher time frame level. From here we can see that we have a zone here. Then followed by this confirmation candles here. Then the next thing that is left is for you to calculate what you are willing to lose on the trade and enter the market, targeting the previous high on the 4 hours time frame. Before we do this last example here, I want your full attention because this might be difficult to new traders. But even if you are a beginner trader, you might also understand this if you have watched the video in the description below. But before we begin, if you are enjoying this video so far, I would like you to help out the channel by subscribing so that we can reach 10,000 subscribers by the end of 2022. As we can see, we have a demand zone here. Guys, this kind of zones will be on another video in the future. So from here we will use the lower time frame to find entries while targeting this previous highs. So before we can move to the lower time frame, firstly we have to find the bearish candle before confirmation candle, which is this one here. Then on the next step is to find a bullish candle close on the zone. Then the final step is to draw the line here because there is no valid sniper entry in this higher time frame. Then this line in this higher time frame will be used as our entry point in the lower time frames to find our trading signals there. And lastly, note that this low here is our invalidation point, meaning if you are in the lower time frame but the market keeps going lower and lower without giving you any buy signals. So if the market breaks this point, then you should stop looking for buy setups, just move on to another pair and do the same thing. Now this is the time where I need your full focus. And bro, don't even blink because you will miss a lot of information. From here now we can see that we have a minor break of structure here. And we can also see that the market attempted to break the structure even here. From here now, after we have noticed that there is a confirmation candle in the market, then we will try to enter below the confirmation candle in the lower time frame. So we will just put a green horizontal line here, so this will mark up an area or price point where we should start to look for bullish trade setups. If this is kind of confusing, you don't have to worry, everything will be clear in the lower time frame. Before we move on to the lower time frame, remember this is the 3 hours time frame. Below this green line is where you should look for bullish trade setups. Then another scenario is that let price to touch the green line before you can start to look for bullish trade setup. And the market confirmed the bullish setup here. And then it retraced back to the green line here. So meaning we will look for bullish setups in this areas here. So let's zoom in and see if this will be great or not. The market touched the zone here, so we will look for setups after this price action. First trade is this one here, which we can all see that it moved higher and then comes back and stop us out. Meaning we are negative now with 4 pips. Remember, risk management is key. So let's move on to another trade setup because the market didn't invalidate our higher time frame zone. Another setup is this one here, which also resulted in a loss again because I know how my strategy full works. This doesn't even worry me a bit, and you should too. So now we are in a loss of 11 pips combined with the first trade. So I choose this example to show you that you as trader you will always have some losing trades in the market. So the only thing that can help you is that don't lose too much when you lose, because I have noticed that some traders still trade 1:2, which is very low. But if you are a beginner I would understand. Moving on, we will keep trying to find another setup. As long as price action is still above the invalidation level, we will keep trying to get a bullish setup. We can also see here that there is no setup yet. Now we can see that price is still moving lower and we have 3 demand zones that never confirmed here. But now we will zoom in here so that I can also explain everything clearly. If you have watched the previous video, I would like you to attempt this section here. I will give you some few seconds to try. And remember guys, we have lost 2 trades so far, totaling 11 pips. So now that we are here, you will understand that now we have another demand zone. But this time is going into our favor, and remember that where our take profit is at. And yes, if you are new to the channel, the entry is here and our stop loss is below the zone. Before we continue, let's look at our take profit level in the higher time frame one more time. Holy moly. Yes, this trade setup is 1 pip stop loss. After losing 2 trades at long last, it finally moved into our favor. So guys, if you are also enjoying this video so far, give this video a like, and lastly visit our Telegram channel to find the PDF of this video. The link to the Telegram will be in the description below. Now we need a microscope to find the 1 pip stop loss on the chart now. And this 2 level here are the higher time frames take profit levels. What if you missed this area where you got bullied twice? And you saw the market here? We will do the same thing again by putting the line on the sniper area. Then when we move on to the lower time frame we will try to find an entry. So let's do so, because this is also confirmation candle. What we need now in this lower time frame 5 minutes is to look for a demand zones around this areas here. Then we will try to enter the market with low risk. Also don't forget our previous entry is here guys. Here we can see that our trade aligns clearly with our trading plan, but the market decided to hit our stop loss with 2 pips, but would you give up? Now I want to show you how to read price action step by step. We will also follow our trading plan to the T. Let's zoom in at this area so that I can explain everything. From here we can see our trading plan that we need to follow, so we will firstly draw our demand zone. And guys, while I was making this video I realized that I made only bullish setups. So that means I will owe you guys a bearish video of this. Moving to step 2, we will mark our sniper entry level. Here on step 2, we have marked our sniper level area. This will also help us to enter the market with a small stop loss. 3. We need to see a bearish candlestick before a confirmation candle. 4. We have to also see a confirmation candle. Meaning we have to see a bullish candle close after the zone has been touched. This will confirm that the market is likely to go higher. And lastly, you will put a buy limit order on the sniper area after the confirmation candle has closed bullish. Then the market is likely to come and trigger your trade. But sometimes you might miss a big move just because you want to sniper every trade. Okay guys, I am done exposing my strategy. I will see you on the next one. Always use a stop loss. Oh, before I forgot, did you know that if you press the subscribe button, it changes color to gray? Press it, you will see.